Now that the 2024 presidential election is behind us, you might be wondering what's going to happen with the price of homes in the coming weeks and months. Is now the right time to buy or sell a home? If you've asked any of these questions, you're in the right place. In this video, I'll uncover the surprising connections between political outcomes and home prices, revealing what history tells us about the future of your biggest investment. Stick around as we dive into the data and uncover what you need to know to navigate the market in the wake of the recent election. And be sure to stay until the end of the video to hear my prediction on the housing market trends for 2025. Now, despite the common belief that presidential elections have a negative effect on home prices, historical data trends actually suggest otherwise. In fact, over the past 9 elections since 1987, home price growth has actually outpaced that of non-election years. And while this might suggest elections are beneficial for the housing market, the reality is more complex than it seems. For example, 2008 stands out as the most challenging year for the housing market in recent history, with home values dropping by a whopping 12%. This decline wasn't tied to the presidential race between Barack Obama and John McCain, but was due to the broader economic factors, specifically the burst of the 2004 to 2007 housing bubble and the subsequent global financial crisis. On the other hand, 2004 was among the strongest years for home prices, with an increase of 13.4%. And this surge was largely driven by the growing housing bubble rather than the re-election of George W. Bush. The most significant annual increase in home values since 1987 occurred in 2021, with a rise of 18.9%. And this jump was fueled by historically low mortgage rates and the housing boom during the COVID-19 pandemic, and not by it being the first year of Joe Biden's presidency. So what does influence housing prices? Housing values are shaped by a complex mix of factors, including the supply of available homes, buyer demand, and the direction of mortgage interest rates. And while presidential candidates highlight their economic agendas, most economists agree that U.S. housing prices respond more to factors like housing starts and unemployment rates and interest rates rather than changes in political leadership. In fact, for any president to directly impact housing prices, they would need authority to control substantial purchases or sales of homes, a power that they just don't possess. So should you buy or sell during an election year? If you're considering a real estate move, then the election season shouldn't necessarily influence your decision. Your personal finances, rather than national politics, should guide your timing for buying or selling a home. And while home prices almost always increase in election years, which is a good thing for homeowners and their equity, the number of days that homes for sale are on the market also increases, which is not a good thing if you're trying to sell your home. By the way, my name is Ben, and I'm your guy for all things Oklahoma real estate. If you'd like to know the 10 biggest mistakes to avoid when buying or selling a home, then click or tap the link down in the description below this video to download my free guide. Now, historically, many buyers feel a bit hesitant about making a big decision like purchasing a home during election season, which often leads to a temporary dip in home sales. So even with low inventory and quick turnaround times in certain areas, sellers shouldn't be too concerned if things start to feel slower, because it's a typical pattern for this time of year. Now, for buyers, it's also common to see fewer new listings hitting the market, as some homeowners may decide to hold off on selling until after the election. Plus, the timing of elections in November coincides with a natural seasonal lull in the housing market. Spring and summer usually bring the busiest activity as buyers try to settle in before the school year or holidays. So any slowdown can often be attributed to this cyclical pattern as well. After elections, the market almost always picks back up. Both HUD and the National Association of Realtors data show that home sales have risen in the year following 9 out of the last 11 presidential elections since 1978. And while home sales tend to pick up in the months following an election, there's something else that begins to come down, and it can have a massive effect on your monthly payment. The Federal Reserve typically avoids major changes to the federal funds rate in the year leading up to an election, those shifts are still possible, and we've seen some of those in 2024. However, as election results and anticipated policy shifts unfold, we could see interest rates adjust in response. Historically, looking at the last 12 election years since 1972, 7 times rates ended the year higher, 4 times rates ended the year lower, and 1 time rates stayed the same. The data show little correlation between the winning party and interest rate trends. Rather, the economic conditions at the time drive rate changes. And while the Federal Reserve and financial institutions are responsible for setting interest rates, the president can have an indirect influence. By nominating Federal Reserve members and enacting policies that affect economic activity, the president can impact the conditions that drive interest rate decisions. Presidential policies that affect spending and saving patterns can prompt the Fed to adjust rates to stabilize the economy. For example, the Fed raised rates in 2016 as Donald Trump's anticipated tax cuts and deregulation measures suggested potential economic expansion. And though the president may disagree with the Fed's action, the Board of Governors maintains the final authority over strategic decisions. With inflation finally slowing, the Federal Reserve is more likely to begin making rate cuts as we end 2024 and move into 2025, though it has been keeping rates elevated to control any resurgence in inflation. The possibility of 1 or 2 rate cuts remains, which could lower borrowing costs and potentially reduce monthly mortgage payments for homebuyers. And that could be a savings of tens of thousands of dollars over the life of a mortgage loan. After making a 25 basis point rate cut in the same week as the 2024 election, I think it's likely the Federal Reserve continues on this track going into 2025. If we see rates dip below 6% and inflation continue to slow at its current pace, then expect a wild market in 2025 with buyers once again flooding the housing market. Whether you're thinking of buying, selling, investing, relocating, or you simply want to understand what these shifts mean for your financial future, then staying informed is key. And while presidential elections may get the spotlight and do have an impact on home prices and interest rates, it's the broader economic picture that ultimately shapes our housing market in the United States, as well as changes to state laws that can have larger and sometimes unintended consequences, like this law that was passed in Oklahoma at the end of 2023.